Today's video is brought to you by credit cards. Spend today, worry tomorrow. Hey guys, James here on my channel Developism. I just wanted to start this video off with a little story. So last month I received an email from my bank notifying me that my credit card limit was being raised. Now I've had this credit card with my bank for about 10 years now, and this is the first time they've ever brought this forward to me. I've never asked for the credit limit to be raised. I've never wanted it to be raised. I always thought maybe sometime in the future, if my life situation, if circumstances in my life change, then yes, I might want to raise my credit limit. But for now, I was quite happy. What surprised me was that they did this automatically and gave me about a month's notice. Now I thought that it was a strange thing that they raise the credit limit and then tell you that you have to do something if you want things to stay the same. Wouldn't they just notify you to say you are available to raise your credit limit? But no, I have to go out of my way if I want to keep things as they are. Now I'm not for or against credit cards as long as they're used responsibly. I have my credit card set to an auto payment, so whatever I spend that month, it will automatically be taken care of next month. The only thing I use my credit card for anyway is either petrol or a mini holiday. So I don't overuse my credit card. I don't have to use my credit card. I only use it to serve my credit score because cash is king. But what worries me is, I'm sure some of you will agree, with a higher credit score becomes a higher temptation to spend. We want new shiny things and we don't want to wait for it. So what really worries me about this automatic increase, it could essentially be the start of a credit card horror story, which is why I wanted to share this video today so people become more aware of the risks and dangers of credit cards. So even though my little story isn't so much of a horror story, I could see somebody in this exact same situation go, I had this credit card for 10 years, always had the same credit limit, I was always quite reliable, I never spent over, and then they raised my credit card. I spent a little bit more, I got a little bit greedier, and then the banks came in and went, oh, we've got you. Because let's be honest, the banks don't want you to just pay back your credit card. The bank wants you to fall behind a month or two and get that little credit bonus, because otherwise it's free money. I mean, I spend with a credit card, I pay it back. It's just delaying the money moving from my bank account into their account. It's when you go, I'll pay that, and I can pay that in a couple of months, and I'll give you the extra in a couple of months. That's when they start to make the money. Because if everybody paid off the credit cards in time, nobody would ever use credit cards. It's as simple as that. They wouldn't be profitable or practical. They'd just be a waste of time. Okay, so as a part of this video, I have looked up 3 different credit card horror stories to tell you today. The links to these stories will be in the description below, so feel free to check those out if you like. Also, if you hit that like button while you're down there, that would be great. Story number 1. When I was 18, just old enough to sign up for a credit card on my own, I worked at a retail store and had forgotten my debit card one day. I was hungry and I wanted to eat something, so I signed up for a credit card and charged 2 Snicker bars to it for around $5. I don't know why I was the way I was, but I just decided to not pay on my credit card, and I ended up racking up late fees to almost $500. I ignored the statements until I had to ask my family to help me out with that monster of a bill, and it just now fell off my credit statement 3 years later. Adulting is hard, but thankfully I'm now the financially responsible one in my marriage. So a bit of a short one there, just to get our feet wet. Now what I like about this story and the other 2 is that they can each teach you an individual lesson. The lesson of this short story is don't ignore your credit card bills. Don't ignore any bills. Just don't. Okay guys, story number 2. What I did with my first credit card is the perfect example of why teenagers shouldn't have them. My parents never provided me with a credit card for my own. I grew up in a relatively modest income family, and my early onset of spendthriftedness was not a character flaw they could afford. You can imagine then that I jumped at the chance to own a couple of credit cards when MasterCard and Discover called me shortly after my 18th birthday. "Congratulations, Mr. Rox," they said. "You qualify for one of our cards." Really? Little old me? I could barely contain myself. I was Sally Fields at 1985 Oscar Awards. No wait, make that Tom Cruise jumping on Oprah's couch excited. And when the cards arrived in the mail several days later, my adult life and the ensuing consequences had finally begun. I didn't understand, nor did I care, about the fine print. One of the first and most lasting mistakes of my overly eager anticipation of receiving those rectangles of endless riches was that I never considered the fine print associated with the cards. Because who cared about the fine print? Not me. And I paid for it dearly. An interest rate of 23.99% plus substantial late fees plus annual fees quickly started to add up while my income did not. I didn't appreciate the value of the dollar. I started working young. I shoveled snow and helped elderly people around their homes when I was a kid. And I started at age 14 and took on better paying seasonal and part-time jobs. While my work ethic was positively cultivated, my appreciation of money wasn't, because I didn't have any expenses, zero, zilch. Instead, I spent my money on recreational activities with my family, and clothing, shoes, and accessories. In my defense, I was voted best dressed male student at the high school. When I went to college, however, the money dried up while the clothes buying habit remained. But I still went on a shopping spree anyway. Yep, when I entered college, I bought a whole new wardrobe with my credit cards without any regard for how I was actually going to pay for it. Maybe in the back of my mind I was hoping to be Alma Mater's best dressed new student. Unfortunately, institutions of higher education don't have those juvenile superlatives, and I just ended up poor but stylish. I maxed my credit cards out in a matter of months. I can accurately tell you that by October 15th of my freshman year, my cards were maxed out $2,000. I'm not sure how or why I remember that, but I do. I had a great time spending the money, of course, but now I was faced with how I would pay it back. I didn't have a job, and I knew my parents wouldn't bail me out. The only other option, start earning cash stat. I couldn't afford the payments. Unfortunately, my new job working in the call center of my college at $6.25 an hour for 9 hours a week didn't quite cut it. And let me be even more transparent here. When I got my paycheck on Friday nights, with parties on the horizon, there was no way any of that money was making it into the mailbox. I brushed off the bills, hoping they would magically disappear. Those collection calls were non-stop for a while, but I learned how to avoid them. I swore off answering the telephone altogether, and because I couldn't afford to pay the bills, I just tossed them in the trash. Out of sight, out of mind, I thought. This tactic helped me take my mind off the mounting debt in the short term, but it wasn't going anywhere, and it just got worse. The black cloud of debt followed me everywhere I went. Job interviews, apartment applications, car loans, for years. Well into my late 20s, in fact, and I became a bit depressed about it. After giving up hope that they'd receive the full balance, the collection agency offered me a payoff deal at about 50% of the current balance. I took the deals and was relieved to end the nightmare that I stupidly created, but the after effect lingered for several years more. Okay, and then he finishes off by just talking about his mistakes and how he turned it around to actually become a financial advisor, which is a nice light ending to a horror story at least. But like I said earlier, each of these stories have their own little theme. The first one was just flat out ignoring the bills. And even though you can tie this story into that, I think this story is more focused around wanting to spend the money on having fun and indulging in life more rather than paying off the bills, where the first one was just flat out ignoring. Okay, story number 3. The short-term loan that wouldn't die. Excellent name for a title. Arthur and Stephanie had a problem. They needed about $1,000 to make it to payday, but they only had $500. They applied for a payday loan and were immediately approved. Breathing a sigh of relief, they paid their bills. But the very next month, they were short $600. The fees attached to their loan meant they couldn't make it to payday again. They had to take out another payday loan to bridge the gap. And the next month, they were short $650. Their one-time solution turned into a permanent problem and they didn't know what to do. Short-term loans like payday loans and car title loans feel like lifesavers. They give quick, easy cash to bridge gaps in your finances. But like Arthur and Stephanie discovered, the fees on those loans are exorbitantly high. Instead of being an easy fix to financial woes, they can trap you in a cycle of payments, borrowing for months or years. Beat this monster by tracking your income and expenses carefully, enough to never get surprised near the end of your pay period. Okay, another shorter story, but this one is a good example and can easily translate to credit cards. Those short-term loans do have a lot higher interest rates compared to credit cards. You can still get caught in what they called a borrowing cycle, and before you know it, you can find yourself in a lot of debt. And from these 3 stories come 3 lessons. Lesson number 1, don't ignore your credit cards. Just don't. Lesson number 2, learn delayed gratification. Don't be tempted to spend your money as soon as it comes in, because you might need it to pay those bills. And if you buy that thing that you want right now, it's going to cost you a lot more than what you've just paid for it right there and then. And lesson number 3, always make sure you have means of paying back the debt before you take on the debt in the first place. You always need an exit strategy. You can't just hope that maybe the next day you'll win the lottery or a rich uncle with a massive fortune just died and left you everything. And don't pay for debt with debt. I know times can be tough, but you're better off tackling it while it's a small debt and not a mountain of debt. That's all I'm saying. Okay guys, thank you so much for watching if you've made it this far, and if you could hit the like and subscribe button, that would mean the world to me. Feel free to check out some of my other videos, and I wish you all the best. Until next time.